everyone, this is Mitztrades with the El Dorado Trade Group, and this is the 8th lesson of our series, Everything You Need to Know to Trade Stock Options, where today we will be discussing the Greeks and how these factors will affect your option contracts. The Greeks are a set of 5 different numerical values identified by different Greek letters, delta, gamma, theta, vega, and rho, that help traders understand the sensitivity of an option's price to various underlying factors, such as the stock price, time to expiration, and volatility. They are meant to be viewed and considered, but is not a part of your charting or actual trade execution. They are merely different data points to show you your potential option contract movements. Let's start with delta. Delta is the most well-known of the Greeks and is a measure of the change in an option's price relative to a change in the stock price. It is expressed as a decimal value between 0 and 1. A delta of 0.5 means that if the stock price increases by $1, the option price is expected to increase by 50 cents. This is useful information for traders as it helps them understand how the price of the option will move relative to the stock price. It is a rule of thumb to only trade option contracts with a delta of 0.2 to 0.25 or higher, so that when the stock does move, the contract you are trading will also have a worthy reaction. Next, we have gamma, which measures the change in delta with respect to a change in the stock price. This is an important metric for traders as it helps them understand how much the delta will change if the stock price moves, which in simple terms means the gamma represents how much the delta will change with every dollar move in the stock. Theta is another critical Greek, as it measures the rate at which an option's price declines as time to expiration decreases. This is important for traders to understand as it helps them understand the time decay of their options. Theta can be calculated by taking the price of an option contract and dividing it by the days left it has until expiration. For example, if you are trading a $5 contract on Monday that expires on that upcoming Friday, the theta will be $1, meaning every day it will lose $1 of value in time decay. Let's say you are trading an option contract with the same day expiration, also referred to as 0 DTE, and your contract is $1.50. Your theta will also be $1.50 because it expires at the end of the day, which is why trading 0 DTEs are more dangerous than other days of the week. They decay much faster, so you cannot stay in positions as long without being severely affected by the theta or time decay. The next 2 Greeks are good to be aware of, but I personally do not use or view them. I don't find them to be valuable for my personal trading style. Vega is the Greek that measures the sensitivity of the option price to changes in the volatility of the underlying stock. This is important for traders to understand as option prices can be impacted by changes in volatility. Finally, we have rho, which measures the sensitivity of the option price to changes in interest rates. This is an important metric for traders who trade options on stocks with high dividends, as interest rates can impact the price of these options. In conclusion, the Greeks are a valuable tool for traders to understand the sensitivity of options prices to various underlying factors. I usually only keep the delta and gamma values in my option chain to help read the momentum of the contract. Theta, once understood, can be easily calculated in your head. And finally, vega and rho, like previously stated, are important to know, but you will have to personally decide what data you want to see in your option chain. You can edit the data that is shown in your option chain by clicking on the settings icon and adding or taking away whatever values you want to have visible while selecting contracts. By taking the time to understand each of the Greeks and how they can impact option prices, traders can make more informed decisions while planning for a trade. Once again, this was Mitztrades from the El Dorado Trade Group. Thanks for watching the 8th video in our series, Everything You Need to Know to Trade Stock Options, where today we discuss the Greeks. If you learned anything in this video, please like, comment, and subscribe down below. I hope you have a great rest of your evening.